Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. Let's take a look at some of the stories we're following for you in the BNN Bloomberg newsroom. The Bank of Canada held its key interest rate steady at 2.25% today. The decision comes despite a rise in inflation and unemployment in December. Policymakers saying in October that borrowing costs were at about the right level to support growth while keeping inflation near the 2% target, and they've repeated that message since. Hydro One will build a new priority transmission line in the Greenstone region of northern Ontario, with the project expected to be in service by 2032. It aims to provide additional capacity to the area, improve reliability, and support economic development. First Nations leadership will participate in decision-making and have the opportunity to invest up to 50% equity in the project. Shares of Agnico Eagle Mines and Gold Sky Resources are trading higher. Agnico is selling its majority stake in the Orsele Gold project in Sweden to Gold Sky. The agreement will see the miner take full ownership of the project. Gold Sky has agreed to pay $20 million in addition to more than 75.5 million common shares. The transaction between the Toronto-based companies is expected to close by June 30. And looking at the markets heading into the afternoon, in pretty much a wash right now. You can see the TSX down ever so slightly, but still above 33,000, in and around its record high. And south of the border, as they await word from the Fed, it's mixed as well. Unsure might be the best way. The S&P 500 briefly touching 7,000, but now back down below it. The Dow, virtual wash right now, and the NASDAQ, similar situation. Okay, in a decision that was largely expected, the Bank of Canada announcing it is holding its interest rate steady at 2.25%. For more, we're joined by BNN Bloomberg's Lindsay Biscaya. Lindsay, it's what everybody pretty much expected. What did the governor have to say about it all, though?
Well, really what he was talking about is the fact that the forecast for economic growth really hasn't changed since about October of last year. So, yeah, right now, core inflation sitting around 3%, which is still a bit above that 2% target that the Bank of Canada would like to see. But the Bank of Canada saying inflation continues to come down, particularly when you look at the beginning of 2025 compared to now. And they foresee it coming down even further in the future, which is why they decided to hold that rate steady today. But Tiff Macklem talking about the landscape that we see ourselves in as we head into 2026. He says the range of possible outcomes is wider than usual. He said U.S. trade policy remains unpredictable. Geopolitical risks are also elevated. These are some of the things they're watching for outside of Canada's economy. But when it comes to Canada's economy as well, he talked a lot about that labor market, right? We're seeing relatively weak still, but Tiff Macklem saying it's a lot stronger than it was at the beginning of 2025. He said employment has risen in late 2025, but they're watching that slower population growth as well, because that, of course, will slow down that employment rate. And then also, Tiff Macklem talked largely about the fact that businesses aren't really hiring. So they say while they're keeping that rate steady right now, of course, always watching and ready to adjust if they feel they need to. But today, again, as we expected, they didn't feel they needed to. Yeah,
January's been an interesting month, as we've discussed so much. So what can we expect moving forward?
Well, that's the thing. I mean, when it comes to the projection moving forward, Tiff Macklem was asked about that a lot today. He said a big part of that projection is, of course, what we all continue to talk about, which is the CUSMA renegotiation, which is happening this summer. That's a very important factor. And because we don't know which way that's going to go in terms of further rate cuts, Tiff Macklem says in terms of timing and whether those rates, we'll see rate cuts or rate hikes or things stay the same, they don't know, right? It's so hard to predict. But there was another really interesting factor that factors into the whole uncertainty thing, and that was the risk of independence to the Federal Reserve in the U.S. And of course, as you mentioned, we're going to be hearing from the Fed just in under an hour, but there has been threats by the White House to the independence of the Federal Reserve. And Macklem, of course, has spoken out about that. He was asked about that today, why he felt it was important to speak out. And he said that the loss of independence of the Fed would affect all of us, particularly Canada, because our financial markets rely so heavily on what the U.S. and American financial markets are doing. So he was talking about that today, too, in his press conference, and we have a little bit of what he had to say.
It provides central banks with the space to take difficult decisions that benefit the economy, benefit the citizens of that country over the medium term. And the historical record is very clear. Central banks with operational independence for monetary policy do a better job of delivering price stability for their citizens. Under Fed Chairman Powell's leadership, the Fed, he is doing a good job at leading the Fed based on evidence, based on facts, based on best economic judgments of the FOMC. I hope it stays that way. That's going to be important for everyone.
So just another thing that Macklem says they're watching for in terms of what could cause some uncertainty to the markets this year. And of course, as I know, you were speaking with many economists throughout the day as well. Most are saying there's nothing in today's announcement that signals there's going to be rate cuts anytime soon.
But we'll leave it at a but.
Don't know. Exactly.
We'll leave it at a but.
Getting harder and harder to predict.
All right, Lindsay, thank you for that.
Thanks.
BNN Bloomberg's Lindsay Biscaya. Well, the S&P 500 hit 7,000 briefly today as the market rebounded from the sell-off sparked by U.S. President Donald Trump's threats about Greenland. The gains largely driven by tech stocks as investors await earnings from Tesla, Meta, and Microsoft in the next few hours, then Apple tomorrow. Joining us to talk more about this is Neela White, Senior Portfolio Manager at Blue Wing Advisory Group, Raymond James. Neela, thank you very much for joining us.
Thanks for having me today.
Let's talk about the 7,000. It's kind of a magical number. Went up above it briefly, but it just pulled back. What your thoughts on that little topping of $7,000 and then the pullback?
Yeah, when I look at what happened this morning, and we are seeing a teeny bit of a flattening or a pullback, I think the market's still driven by strong confidence in the AI theme. I think we're now also getting a trickling down of how is that AI stuff with the Mag 7 actually being distributed and used in other core industries and core sectors, healthcare being one of them. So I think we're looking at those two things, as well as, maybe from the U.S. side, they're looking for language when the Fed comes out at 2 o'clock, suggesting that maybe later on in the year there might be interest rate cuts if indeed there's not one today.
And now there has been talk of 8,000 by the end of the year. Is that if we see the rate cuts of that?
I wish I could prognosticate that. This is one of those days of, today's this, tomorrow's announcement might be this, and how is the market and momentum being driven along by that? So I'd have to say it's certainly a bit of a whiplash and mind-boggling to me.
But if we do see the rate cuts, I mean, most people are predicting maybe 2 or 3 rate cuts this year. Is that kind of baked in already, or would that be something that might spur the markets?
It might be something that spurs the markets, just because looking at our side, there has been none, and there may not be until maybe later in the year. So I think it would be spurring the market, making investors again feel, as they see prices move up, the fear of missing out, money moves back into the market, and we see it continue to go higher.
Now, and of course, I think a lot of people, it feels like today is kind of one of those wishy-washy kind of days. Everybody's just sitting and waiting for the Fed, and then waiting for the reports from Meta, Microsoft, and Tesla. Meta and Microsoft, I think, are the two big. I mean, Tesla's important, obviously, but those two seem like the ones that people want to see.
Mm-hmm. Yeah, and I think, it's been slightly down for most of the morning. And I think when we look at whatever's going to be announced at the close as far as earnings go, really it might be a waiting to hear what the language is and seeing if all of the money that has been put on in the AI spending, data center building, and all of those things, if it's going to be realized in their profit numbers. So I think it is for all those companies a bit of wait and see of here's how 2025 ended. What do we feel is happening for the rest of 2026? Granted, it's early days, but there is so much going on in the market. I think it is the feeling of is more going to be spent, and if so, does it actually materialize into growth and profitability?
And are you looking at that for the same thing for all of them, or are you looking at Tesla, expecting you want to hear certain things from them, Meta the same, and Microsoft something different?
A little bit. I think if I were to look at Apple as being one of them, I know that they had a delay on their update of Siri. So when I look at even the products online, Google Gemini, really neat product, Chat GPT and stuff like that, they have been a bit slow to the table with updating their software, but as well, they haven't spent as much. So that could be, it could be a negative because it slowed down their build out, but it could also be a positive because they've not spent that money, whereas the other companies have. Microsoft, I still like that as a company. It's had great quarters, but it could be that now with the massive spend that they had on building data centers, that the market might be looking at, okay, how did that relate now into the profitability? So I think it's sort of a common theme on how did the spending reflect in their numbers, but then each one I think has a little bit of a different different nuance depending on what sector they're in.
All right, let's get to some stocks that you want to talk about. Stryker first up. What do you like about that?
Knees and hips.
I know well about those. I got one steel one, and I got a couple more coming probably.
There you go.
I'm a prime candidate for them. Tell me more.
Right. So I think when I look at stuff, especially that supports the aging demographic, I look at it as such a structural theme. Like aging is in place for decades. So these companies, no matter sort of what's going on economically, they're going to benefit from that whole trend. It supports knees and hips. They're a global leader. And I think what makes them quite unique is they have the Mako Smart Robotic, which is actually a robotic arm controlled by a surgeon. So when we look at that as their development and ability to use it, it's being used in orthopedic centers, hospitals, teaching hospitals. So I think that has such a broad-based global tailwind.
Mm-hmm. I'm starting to take some of your selections personally right now. Is it AbbVie? Is that how you pronounce it? AbbVie? AbbVie. But they're chronic diseases such as arthritis. What's going on here?
So I mean, one thing, and for all the times that I've been on, I tend to select stocks that really support the aging demographic, just because it also is a theme and a number I very much understand, because it's a bit of my area of specialty. So I look at AbbVie and I think at chronic diseases, arthritis, rheumatoid arthritis, psoriatic arthritis, cancer, degenerative eye diseases. I look at that, and again, that tends to be sadly one of the things that increase as we age. So they have great drugs that focus on chronic diseases. And the interesting thing with them right now is that they're one of their drugs, immunology drugs, Humira, it's come off patent. Mm-hmm. They have a replacement called Rinvoq, which has a patent until 2037. So they've done a really good job of replacing what has come off patent with something new. So there's a bit of pricing protection there.
Okay, and we're almost out of time, but let's get the Ensign group in to make me feel completely old.
See, acute care post-op, skilled senior nursing. So again, when we look at that 80-plus aging cohort, both, granted it's an American company, but when we look at this number from a North American perspective, the number is just growing. Again, the theme is in place for decades and decades, that these are services that are just going to increase in demand. And because the skilled labor needed for a lot of these positions, it is slightly declining. We know what happens when there's an increased need and a decrease in supply. We're looking at pricing power, right? Okay. So when I look at all of those themes, when I look at the three rolled up together, yes, it has to do with aging. It just has to do with here's a theme that regardless, for the most part, regardless of what's happening on the market, it's a medical necessity.
Okay. I got to wrap you up.
Structural demand. Okay.
All right. I got to wrap you up there. I have to go to physiotherapy. Neela, thank you very much for joining us.
Thank you for having me.
Neela White is Senior Portfolio Manager at Blue Wing Advisory Group of Raymond James. Still ahead, NASA is sending astronauts, including Canadian Jeremy Hansen, back to the lunar neighborhood. It's for the first visit in 50 years. We'll take a closer look at the mission after the break. Well, NASA is sending astronauts, including Canadian Jeremy Hansen, back to the lunar neighborhood. It's the first visit in 50 years. The Artemis 2 crew will test a spacecraft that's to play a key role in America's eventual return to the moon. Bloomberg takes a closer look.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century.
It has a stark beauty all its own.
The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union.
Beautiful view.
This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
I'm Christina Cook, and I'm a mission specialist on Artemis 2.
I'm Jeremy Hansen, also a mission specialist.
Victor Glover, Artemis 2 pilot.
Reed Wiseman, crew member on Artemis 2.
The Artemis 2 crew is very much a crew of firsts. It will include the first person of color and the first woman to travel around the moon and into deep space, and it will also have the first Canadian to do the same.
Just yesterday, our crew did a sim, all four of us, and this is something we'll do over and over again on the way to flight. But there are 1,000 ways this vehicle could kill you in space. And we don't get trained on, every single one of those. We get trained on a methodology to approach the problem. The moon is a great proving ground for us to operate off of our planet. We've been doing it over 2 decades on the International Space Station. We built a global coalition for low Earth orbit. And now we need to extrapolate that to the moon as we set our sights out on Mars.
4-stage engine start.
Prior to Artemis 2, NASA launched the very first major mission in the Artemis program called Artemis 1, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis 2 mission is coming up, Artemis 3, Artemis 4, Artemis 5 are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible. NASA stands at something of a crossroads these days. For much of its history, the agency has been the one to oversee the development and fully fund the development of most of its major hardware. But there's been a big push lately to transfer a lot of that work to the private sector and to the commercial companies that are revolutionizing the space industry. The Artemis 2 mission comes just as NASA gets a new administrator.
I grew up as the ultimate NASA fan.
Billionaire and fintech entrepreneur Jared Isaacman, who actually has an extensive resume with SpaceX.
America will return to the moon before our great rival, and we will establish an enduring presence to understand and realize the scientific, economic, and national security value on the lunar surface.
Lawmakers and industry officials have warned that if China were to send humans to the moon before NASA returns, the country could stage something of a lunar land grab that would prevent NASA from exploring the lunar surface as fully as possible. There's a lot to be gained for the Artemis program, from learning how to live off-planet and setting the tone for international cooperation in deep space. The goal right now is to land humans by 2028 and to start establishing elements of a lunar base by 2030. But there's still quite a lot of work to do before any of that will be reality.
When are we going to have a sustained presence on the moon? It's a very hard thing to project. But looking at the rapid pace of technology development, leaps right now, is,
I think it's distinctly possible within the next few years. I'll leave it that vague. Just the fact that that's possible in this time, and that effort grew out of our commercial crew program and sending cargo and then people to the space station on top of Falcons and then Crew Dragons. It's just a great time, a golden age of human space exploration.
Still ahead, Northwood, the maker of ground infrastructure for the space industry, has closed a $100 million U.S. Series B deal. We'll bring you Bloomberg's conversation with the CEO and co-founder, Bridget Mendler, after the break. Northwood, the maker of ground infrastructure for the space industry, has closed a $100 million U.S. deal, Series B, led by Washington Harbor Partners. Bridget Mendler, CEO and co-founder of Northwood, discussed the demand driving this funding round with Carolyn Hyde and Ed Ludlow on Bloomberg Tech. Take a listen.
For us, it's really about taking space missions further faster. I think you guys have been really tracking the developments in the space industry over the past year, both on the commercial side and on government side. Domestically and abroad, there's a ton of enthusiasm for what we can do in space and really changing our perceptions on what's possible. Oftentimes, there winds up being more friction in taking those space missions live due to the ground. And that's something that has to change. We have to be able to push the boundaries on capabilities, and we have to be able to do that on a rapid timescale. So for us, what this funding represents is a significant amount of demand that we've seen from a wide variety of customers and being able to enable their missions to go further faster. So this year has been a really exciting example for us to kind of show what that end-to-end concept looks like for Northwood. Many people do know us by our phased arrays, which is critical to how we think about the ground, really introducing novel hardware solutions so that we can do more in space. Right. But we view ourselves as an end-to-end partner for these space missions, all the way from the concept that they are initially coming up with to the time when their data is streaming live and actually delivered to end users. And we've actually done that. We've gone from an initial concept of saying, hey, let's have dynamic links that you can access, not just from low Earth orbit, but all the way up to geostationary orbit in the same system. And then let's show how fast we can bring that concept into reality. And so, we're talking today as well about our contract that we closed with the U.S. Space Force.
Well, Bridget, let me jump in here. It's a $49 million contract with the Space Force. What will you be doing with them specifically? But also my understanding is there is a link here between the money that you raised in the Series B and being able to kind of just execute on that contract.
Absolutely. Well, we've already executed on that contract across a number of milestones. So contract was executed, and at this point, there's been a 3-month turnaround time from kickoff of that contract to actually delivering links live in the field. So we have those links live in the field already. And so what the funding represents for us is let's scale that model. Let's do it more. Let's demonstrate how we're able to deploy a global network of this portal product that supports the dynamic links between low Earth orbit and geostationary orbit, but also serve up more space capabilities that we're getting a lot of appetite for. So the funding really represents being able to serve the appetite that we're seeing and hit larger production volumes.
Bridget, we've been lucky enough to talk to some of your key investors, and Mina's been on the show before from Washington Harbor Partners, and he put it to Ed that Northwood provides the only viable approach capable of scaling ground station capacity. But you're not actually technically the only approach that could be taken, because you could also go to Blue Halo, for example. So what is your unique selling point? How are you differentiated from others that have been winning contracts?
Yeah, I think the way that we view our difference is really, for space providers today, they wind up running two companies. They wind up having to run the space mission that they're supporting, but they also have to stitch together a complex value chain of different pieces of the ground. They have to think about ground hardware, like you mentioned, Blue Halo, another developer of phased array hardware, but they also have to think about, sites, global shipping, logistics, operations around the world. They have to think about the software interfaces and the network backbone attached to that. And so where we find ourselves really differentiated is we take on that full problem scope And I think, what we've connected with Mina specifically on is the importance of being able to deliver the end-to-end solution and do it on a condensed timeline. And we feel like there's huge value in being able to do that. And that's why we've invested in that kind of differentiated approach.
You very kindly said we've been focused on space for quite a while here on the show, and many are now training their eyes on SpaceX. But are you winning contract? How's your relationship being built with Starlink, for example? Are there any talks along that motion?
Yeah, I think for us, we've seen significant interest from commercial as well as government use cases. The ambition and the challenge for space just continues to grow. And for ourselves, we've had contact with that company and with other companies, and we're excited to have our capabilities just kind of be the proof in themselves that we are the infrastructure provider that makes sense for a whole host of industry use cases.
Bridget, I know you don't want to focus on this necessarily. You're a former actor, platinum singer-songwriter. You went away, turned to academia, founded Northwood right at the end of 2022, did a Series A at the beginning of 24, and now here we are. And I think there's a lot of interest to learn, how big is Northwood now? How many people? What is your footprint? Where are you deployed around the world? Because you have done it quite quickly.
Yeah, we're just around 70 people. We have sites deployed across 2 continents at this point in time. We have a full production facility running not just our phased array product, but 2 other hardware products that both fit in with that hardware stack as well as work in complement to it. So excited to be sharing those product lines as well. And this year is going to be a really big year for us. We're planning on deploying 18 sites across 5 continents. So just continuing to ramp up our production and the offerings that we can provide to the space industry this year.
Coming up next, we'll bring you the latest headlines from the BNN Bloomberg newsroom. Stay with us. The Bank of Canada held the interest rate steady at 2.25%. The bank offering new forecasts in its monetary policy report and sees Canada's economy growing only 1.1% this year. Policymakers are citing heightened uncertainty on questions about how long the rates might remain steady or whether the bank's next move will be a cut or a hike.
Uncertainty around our forecast is heightened. The range of possible outcomes is wider than usual. U.S. trade policy remains unpredictable, and geopolitical risks are elevated. With heightened uncertainty, we are monitoring risks closely. If the outlook changes, we are prepared to respond. Monetary policy cannot compensate for the structural damage caused by tariffs, and it can't target hard-hit sectors of the economy.
Amazon is cutting about 16,000 jobs as the tech giant continues to streamline operations amid rising AI competition. The American company says it is not their plan to announce broad staff cuts every few months. The eliminations take Amazon's announced job cuts to 30,000 in 3 months after that first wave in October. Employers were warned that AI would shrink the workforce at that point as Amazon automated more of its operations. Toronto-based startup Wabi has secured $1 billion in funding for commercial expansion. The Uber-backed company develops self-driving technology for trucks. Wabi received an additional $250 million from Uber to launch at least 25,000 robo-taxis equipped with its software exclusively on the ride-hailing platform. On day 2 of India Energy Week, the annual gathering of oil CEOs, global business and political leaders from across the energy value chain, Bloomberg TV's Manaka Doshi sat down with Tim Hodgson, the Canadian Minister of Energy and Natural Resources, talking to him about Canada's strategy in critical minerals, oil and gas, potential, and LNG space. Take a listen.
Canada's in the process of significantly increasing our export capabilities in critical minerals, in LNG, in LPG, in conventional oil, in uranium. Those are all private sector companies that do that in Canada. Here in India, you have a number of private sector companies, but also state enterprises. We're trying to create the dynamic. We bring delegations of companies here. We're meeting with your companies so that they understand what's happening in Canada, and we're laying the framework so those private sector companies can do the transactions. One of the things we've been focused on, in particular on critical minerals, is creating new frameworks in terms of offtake agreements, strategic stockpiling, support from export development organizations to bring our international partners into our critical minerals space. We announced at the last G7 energy ministers meeting, I think 26 deals with 11 different countries to develop 6 different mines and processing facilities in Canada. Our second set of announcements are going to come at the big mining conference in Toronto in March called PDAC. Your minister is going to be coming to PDAC. Your companies are going to be coming. I would hope we would have some good announcements there.
Okay, so if I was to simplify that in a way I can understand it, you are hoping that Indian companies, mining companies, would come, collaborate with Canadian companies in the business of critical minerals, which can then be available as value-added supplies to India.
So what I heard from multiple Indian companies here today is they're looking for a secure source of supply for lithium. They're looking for a secure source of supply for graphite. They're looking for a secure source of supply for nickel or for cobalt. We have all of these things. What we need is customers to develop those resources. And by working together, I think we can unlock those critical mineral opportunities. That's good for us. That's good for your OEMs who are looking for secure, long-term sources of supply as India really develops its renewable businesses to get to net zero, but also its OEMs, its automotive sector, its shipbuilding sector, its aviation sector, where these minerals are all critical for the growth.
Gas and oil supplies from Canada.
Yeah.
Is there adequate infrastructure in place, especially when it comes to oil, for these to be available to India at a competitive price?
Sure. Well, let's just start with LNG. So it's a relatively new product for Canada. Our first major plant started production this June. It's a 12 million ton per annum plant, one of the larger plants in the world. The companies behind that are Shell, Petronas, Kogas from Korea, Mitsubishi from Japan, and CNOOC from China. So all those countries find our LNG to be competitively priced. I believe India would find the same. Between now and the end of this decade, we expect to ramp that production from the 12 million tons per annum to almost 50 million tons per annum. So there's a tremendous opportunity, we think, for India, which is a large consumer, to find a reliable new supplier. As it relates to oil, we now have a pipeline to the West Coast that is almost 1 million barrels a day. It is significantly shorter to ship crude from our West Coast to India than it is to go around the Gulf Coast. Many of your refiners are actually buying our crude off the Gulf Coast in the U.S. We're now offering them the opportunity to buy it off our West Coast, which should be ultimately less expensive because it's closer to India. We're in the process of expanding that pipeline by another 400,000 barrels a day. And the province of Alberta, which one of the ministers is here with me, is working on a proposal to develop another 1 million barrel a day. So that would be almost 2.5 million barrels a day of Canadian crude off our West Coast. I'd put that against today. I believe I heard that your total demand is 5 million barrels a day.
Roughly between 4.8 and 5.
So this is a very significant new source of supply. And what I've also heard from your refining companies here is a lot of new investment has gone into your refining sector, significantly increasing the capabilities. And as they increase the capabilities, one of the most attractive forms of crude is a heavy crude, which is what Canada offers. So we're excited that your refinery industry is growing. We're excited that as it grows, our oil becomes more interesting to your refiners, and we're excited that we can be offering it to you off the West Coast on what should be a cheaper source of supply.
What portion of India's purchases do you think Canada could be over the next 2 to 5 years?
Let me just give you some rough numbers. Today, we provide less than 1%, well less than 1%. When I look at Canada's production of oil in the world, we're 6 or 7% of the world's production. We're supplying less than 1. We produce 6 or 7. There's a lot of opportunity to just get to what would be a normal relationship. I think that's an opportunity for someone who thinks it's a buyer's market. I think as a supplier, I'm excited to find an interesting new buyer.
Coming up, a preview on the announcement on interest rates coming up in about an hour from the Fed. We'll find out in about 15 or 20 minutes on whether the Federal Reserve will hold interest rates steady as expected, maybe drop, who knows, but no, more than likely it will be held steady, and all kinds of other factors, though, that are involved in this. Let's get some thoughts on Jerome Powell's decision, and we're going to be joined right now by Gennady Goldberg, Managing Director and Head of U.S. Rate Strategies at TD Securities. Gennady, thanks very much for joining us.
Thanks for having me.
It's a pretty safe bet, I would say, that nothing's going to change. It's going to hold steady. What are you going to be looking for, though, with this announcement?
Yeah, it's a great question. We're looking for a cut, not this time at least. There's still room maybe in the March meeting, although that's not very well priced by markets. The market's pricing in just a basis point of rate cuts at this point, so just about less than a 5% chance. We're really looking for any hints about future meetings. We want to get a better sense from Chair Powell what exactly the Fed needs to see to keep cutting rates, whether or not they expect to cut rates down the line. The other thing we're going to be looking for is to see whether there's going to be any dissents. We do expect Stephen Myron to continue to dissent. That's basically been his MO since he's joined the board. And third and foremost, any changes to reserve management purchases. Remember, the Fed announced those back in December, and they've been doing a really great job at keeping the front end extra loose in the United States.
Okay, well, let's talk about that first. What do you think we might see, or what do you think we might hear about that?
Yeah, on the reserve management purchases, I think they're going to keep relatively mum, to be quite honest. They're doing relatively well. We expect them to keep them going at a $40 billion a month pace. Remember, this is just to grow the balance sheet with the size of the economy. We expect them to scale that down come the April meeting. If they want to scale that down a little bit sooner, the market might take that a little bit negatively because that is actual purchases that the Fed is doing, and that is taking duration out of the market, even though it's in Treasury bills. So I do think markets will be especially sensitive to that. I think net, the kind of the motto of today's meeting for Powell is going to be go 45 minutes without saying very much. Unfortunately, for the rest of us, we're going to have to listen in for all 45 minutes of that press conference and trying to decipher, really read the tea leaves there on anything we can.
And with the dissent, there is some expected. If there's more than expected, how would you interpret that?
If there's more than one dissent, I would interpret that as a little bit of fraying at the edges around the committee. Now, we know there's already fighting going on, friendly fighting, as much as central bankers can. because we're in the range of people's estimates of neutral. Most of the committee, around 70% of it, is between 275 and 3.5 for neutral. We're just above that. We're scratching kind of the upper end of that. The deeper we go, and we do expect the Fed to cut 3 more times this year, the more the Fed is going to be having that debate of, do we need to keep cutting rates? Or do we actually need to stop here because the economy is doing quite well? What they really need to tell us is just what are the kind of the thresholds. Is it just the labor market softening, or do they really just need inflation to come down and actually not necessarily have a labor market softening, but just have cooling inflation towards kind of the middle part of the year?
And now it feels like with inflation, though, they're sort of not content, but they're okay with where it's been hovering for the last few years.
Yeah, I'd say cautious optimism is where I would put it. You know, it's hovering around 3%. It's actually come in better than anticipated, as has growth, as has, you know, the labor market just in the last month or so. The data has been extraordinarily noisy since the shutdown. We're still getting a sense of how the economy is doing. So if the inflation prints come down to about 2.5%, as we expect by the end of the year, that should be a trajectory that would leave the Fed much more comfortable, much more contented to actually cut rates a couple more times to get us back to neutral. But again, a lot will depend on whether that unemployment rate continues to hover around current levels or continues to creep higher once again. And that could be a mover for them as well.
Okay, now let's talk about Powell and Trump. Powell is coming to the end of his term. Is there such a thing as a lame duck Fed, or you know, we've heard about it for presidents and prime ministers, but for the head of the Fed, is that a situation? Is he going to stand pat, do you think, for the next little while until he's replaced, or could we see a cut from him? And then how much pressure do you think he's feeling from Trump?
I think he's feeling a lot of pressure, unfortunately. You know, and there is a threat to central bank independence. It's been made quite clear, I would say. The issue here is it's not that the Fed is not cutting rates because of the president or vice versa. They really are doing what they think is best. And what they think is best right now is to wait and watch for more information. They're not really keen to necessarily go ahead of time and then realize that they've made a mistake. They're going, slowly. They're feeling their way through the dark, just like the rest of us. They're going to try to give us a little bit of insight into how they're thinking about the economy. But at the end of the day, politics doesn't really play a role in their decisions. I don't think there is such a thing as a lame duck Fed chair. I think Powell commands enormous respect from the committee. And if the committee wants to cut rates, and that's the important thing, the committee is the one actioning these cuts, then certainly Powell would not stand in the way of that. And
if there are no cuts until he steps down, does that put pressure on his replacement to get in some cuts? Maybe, I mean, you say 3. Does that put pressure on the next person?
It's going to put a lot of pressure on the next person, regardless. I think. I do think the president wants somebody who will listen to him quite closely, who will, basically kind of do his bidding and cut rates quite sharply, maybe more sharply than most of the members on the committee want. Okay. The issue with that is it can also upset markets. You've seen the long end of the U.S. Treasury curve actually sell off on any attempts to kind of undermine Fed independence and overcut rates, because really the markets get worried about long-term inflation really going through the roof. And investors not being sufficiently compensated. So it's a tricky position for the president right now. The latest is that there are 4 candidates to replace Powell.
We have to wrap. Gennady, I'm sorry, but we have to wrap it up there. I ran out of time. I mistimed this. My apologies. No, but thank you as always, for joining us on this. We appreciate it. Gennady Goldberg, Managing Director and Head of U.S. Rate Strategy at TD Securities. Still ahead, we'll take one last look at the markets before that Fed announcement. Okay, Know Your Options is back. Tune in today at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. You can send your questions to knowyouroptions@bnnbloomberg.ca. And let's take one last look at the markets, and we'll start with down south. Take a look. Those are the markets. They're kind of down right now, a little bit mixed. The S&P 500 did top 7,000 for the first time, but it's backed off. Everybody's awaiting the Fed announcement. But one stock we want to look at quickly before we go, Seagate. It's up more than 20% right now as it had a terrific results and guide, according to the Street. Seagate's demand outlook and pricing commentary suggest no slowing into 2027. And that wraps up this edition of Trading Day. The U.S. Fed rate decision is expected in minutes. Our colleagues at Bloomberg will bring you special coverage. That's up next. Have a great day.